Welcome back to Drive Your Journey. I'm your host, Fred Arnold, and I'm with Dave Cantrell. Dave Cantrell is a American Family Funding Mortgage Credit Union mortgage advisor.
Yes.
And we want to talk today about how credit unions can help serve their members even better.
Right.
Drive their journey to serve more people and
Correct.
serve more members. What are ways in which you found credit unions could use your expertise?
So there's a couple of things that we do. There's more than a couple, but some of the things that we are able to help credit unions with is the first and foremost is we actually bring them loans. Right, we have there will be times when we're with a customer and it doesn't fit every single box that we need for a Fannie Mae or Freddie Mac loan. A perfect example is we did a loan for somebody not too long ago. They're self-employed, recently self-employed. They worked in a business for a long time, decided, hey, I'm going to branch out on my own. They'd only been working as self-employed for 1 year. Fannie Mae and Freddie Mac says it has to be 2 years. Well, we took that to a credit union and said, hey, they've been doing this job for 20 years. They just decided to break out on their own now. This is a great loan. And they said, yes, we'd love to take that loan because now it will help them. So that's one of the things that we do.
Yeah, and I think that's great because these are good, make sense loans that credit unions will do. That's the one thing I love about credit unions is for their members, if it makes sense.
Yes.
And it's verifiable and you could document it.
Right.
They do the loan. Let's talk about revenue, because credit unions are always looking for revenue opportunities.
Right. So one of the other ways that we help credit unions is we have a fee income based product where they have a credit union member who wants to do a loan with them, but most credit unions, you have to put 20% down. That's just the way that their systems are set up. Well, we have FHA loans, we have VA, we have different types of loans. So if that credit union member wants to get a home loan, but they can't use the credit union, we'll take the loan, we'll go ahead and do the loan, we'll run it through our process and we'll fund that loan. But then because that came from the credit union, we're allowed to pay them a fee for that. So that's a way that we can help them out that way too.
I want to stress upon one thing, and that is you have checks and balances, so it's just not a referral fee.
No.
The credit union's actually performing some tasks in order to earn that fee.
Yeah, we actually there is a list there's 2 sets of tasks that the credit union has to complete. One is credit union A, they get a flat fee if they only do so much. The other list is a little bit more extensive. They have to do more things, but that allows them a little bit bigger fee. But it is absolutely documented. It is all compliant. We've run it through every compliance avenue we had at our company. So it's all above board, and it's a great source of income for them.
Yeah, very good. And it's compliant. That's key.
Yes.
Expanded products. A lot of credit unions aren't comfortable selling adjustable rate mortgages when their member is clearly going to retire 5-7 years and don't need a 30-year fix, but maybe a product that's got a shorter term.
Right.
FHA, VA.
Right. And not only that, for the FHA and VAs, that's something that you have to have those licenses with the government, so that's what we do. But the ARM products, right? A lot of people hear adjustable rate and they get scared because of what happened. These are fully amortizing loans. There's nothing crazy about it. The only difference is that for the first 10 years, the rate is fixed, and then in year 11, the rate will adjust to whatever the rate is at that time. But we qualify them on that rate, and there are caps, so that can only go up so high. It can't go to the moon. But for in certain instances, you're right. If maybe this is going to be their first home, right? They think, we want to buy. We're probably going to move in 7 years. This is a great because the interest rates are lower on these products,
and they're able to save money.
Right.
Get into the home they want.
Exactly.
Continue to contribute to the 401k. There's so many avenues that they can do with that. Marketing.
Marketing. Yeah, we've been. I mean, I'll say you're a marketing genius. You've been doing this for a very long time. And a lot of credit unions, they don't really get the marketing side of it. I mean, they're thinking about their members all the time, but I don't think they really think, how can we help the members? How can we expand it? What are different things we can do for the members? So as a mortgage professional that you've been for a long time, you have that experience. So we bring that experience to the credit union and we show them, hey, this marketing idea has been very successful for us. Very easy for you to do, something that I think will help your members out.
Yeah, we can show them how to implement it.
Absolutely.
Which is absolutely critical. And last but not least, you're able to provide the mortgage division when they don't want to have one.
Right. So some of these credit unions, you hear about the law, you hear about the big ones, but there's hundreds of credit unions out there, and some of them are kind of small. They're not that big because they're just a certain sect of people that belong to this credit union. So they're not big enough to have a mortgage area. So we come in and we say, hey, let us be your mortgage division. If somebody comes in and wants to talk about mortgages, send them over to us. We'll talk them, we'll walk them through, we'll take care of them. Some of these partners that we've been with for for 20 years, so we take care of their members. Once that is done, we can either hand that loan back to them if they want to fund it, or we can put it on our books. So it really helps them offer more for their members because they weren't thinking about mortgages before, and mortgages are great investments because they're solid and secure.
Safe for the credit union.
Absolutely.
And they serve. There's a reason why big financial institutions are doing everything they can to get your member to do business with them, because they know when they get that mortgage, they can market every other product.
Absolutely.
And they can get them away from the credit union. And so I'm a big believer in small financial institutions, small banks and credit unions, because they serve a segment of the population, and they serve many times the underserved.
And that's the other thing about us being their mortgage division. We're not going to try and take their deposits. We're not going to try and open a checking account. We're not going to try and get an auto loan or a personal. We do mortgages. That's what we do. And so that way we can just expand that part for the credit union, and the credit union does not need to be worried about us trying to take that customer from them.
Love it. Those who want to reach out to you, Dave?
So you can reach me. My phone number is 661-505-4368. My email is david@affloans.com, and our website is affloans.com.
Not only that, if you can get Dave's morning emails, they're pretty funny.
Yeah, I try and add a little something,
sarcasm.
little something for every day on Facebook.
I love the one that you did that I recently received that says, "I'm starting my diet today, so I held off on the sprinkles on my donut."
Exactly. Yeah.
Thanks for coming in. I really appreciate it.
Thank you.
Absolutely. We're going to jump to a quick break, and we'll be right back.